Hey, 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 and welcome to WYTV7 Christian Broadcasters Network. I'm your host, Lynn Demmons, and this is Financial Confidence. We thank you so much for tuning in for this episode, and I'm super excited over here. Our topic today is Home is Where the Heart Is, and we have some great information for you today. So go get those pens and paper so you can get some great notes out of this broadcast today. But before we get to our guest, into the podcasting studio today, I definitely want to remind you of the guiding principle for our show, which is Matthew 6:33. But seek ye first the kingdom of God and his righteousness, and all these things shall be added unto you. Yes, guys, we ask that you go ahead and do those steps that you need to do to get to your next, and that starts by taking action. And if you break that word action down, what is it? The first part of it is act. The second part of it is, the last part is own. You have to act, own something. And what's in the middle? Yeah, you said it, I. That means you need to be doing something. You need to be acting on something. So take some action today to get where you need to be. Also, guys, we ask that you pray over your finances. So if you will, take a moment and bow with me. Commit this simple prayer to memory. Lord, help us to value the things in this world that are really valuable. That's our relationships with you, our lives, and our families. Help make us responsible stewards of your financial resources, and let us trust your holy word in the eternal glory of your son, Jesus. In his name we pray. Amen.
Amen.
Well, guys, thank you again. I'm super excited over here. If you can't tell, we have a gracious guest in our podcasting studio today. I want to read her bio so I don't miss anything. From Miss Johnsey Lee, that's her name, guys. Yes, today is Home is Where the Heart Is. Johnsey has 25 years of experience in the financial industry, to include asset management, budget analysis, credit analysis, and all of this has been instrumental in allowing her to coach clients to financial well-being. Guys, I don't want to belabor the interview today. I want to welcome her to the show. Miss Johnsey, how are you?
I am wonderful. How are you?
I am great. I'm super excited to have you here. I've had several requests around providing this information about getting a home and starting with the mortgage loan and who do I go to and who do I talk to. So I said, you know what? I know the perfect person. We're going to invite her onto the show so we can have this conversation with you. But before we get started, I want to ask you about your relationship with money. How do you think about money when you initially started out?
Well, first, I want to say thank you, Lynn, so much for having me and inviting me. And it's my pleasure to be here to share with your audience.
Thank you.
And to your question, I would say my first relationship with money was at the very young age of 14. Um, this is when I started my first job.
Mm.
Um, I My experience prior to that was I was a product of a two-parent household. Both my parents were there, and I was what you call a daddy's girl. So I was pretty spoiled. And if you know how that daddy-daughter relationship is, we sometimes have a way of, manipulating or
Getting
getting
your
our
way.
way with our dad. And so my relationship was no different. And I remember one afternoon, I had, all these shoes, but I was a cheerleader and I wanted new tennis shoes and I didn't need them. And I was telling my dad, "Oh, Dad, I need new shoes." And so, of course, he went and got them. And my mom found out and she was livid. And after she found out, she was like, "That's it. She's, we're only buying necessities." Like, so not so much like cut off, but she was like, all of the excess, it's got to stop. So back then, and I don't want to date myself, but back then, you could work at the age of 14, you could drive at the age of 14. So I took it upon myself to do both. My sister, who was 5 years older than me, she worked at a small company, family owned. It was a magazine company. They sold magazines. And I went to her and I said, hey, I want to work there. And because it's a family-owned business, the lady signed a work permit. And before you know it, I was working at 14. I was excited. So my first job was in sales. And, when you start a job at a young age with no responsibilities, for me, it was like I can do anything. So me coming in amongst all these adults, I was top salesperson, so every check I received, I would go to the bank every Friday when I got paid and hand it to the teller and say, I want to cash my check. Didn't make any deposits, did not, I had no teaching around how to manage the money that I was now making. So, not having any teaching, I got my check every week and I cashed it. Every week I cashed it and I spent. So it was just my experience was with money. I saw money as a resource to get the things that I want, period. That was it. And I mean, that mentality, carried on for years. Even after I started in the banking industry, um, you know, my platform as a new banker was just really getting people to be bankable. It wasn't about, how to leverage money, how to save, how to invest, because I wasn't there, and it wasn't until many years later. And so I married at the age of 25. And, God, I say he's always, looking over me with his angels. And so he graced me with a husband who was a great steward over his finances. So he was a saver. So luckily, one of us in the relationship was a saver. And because I knew that, I took that for granted. And even though I was working in banking and working in the industry, I did not save. I was like, my husband, he's saving for us, he's saving. So I was married for 17 years, and it was not until my divorce that I really started to realize and see money very differently and understand that, saving is a critical part of your financial well-being. It is the fundamental part of your financial well-being. And so I had even, prior to divorce, I had even invested in real estate and we had a business. But again, I was still dependent upon my spouse at the time to manage those finances. So many years later, here I am with a totally new and, I would say, refurbished mindset around money. And I see it as, and I educate others about saving and budgeting, because I know how much I struggled in that area for many years, even working in the industry. And so I've come across so many clients who don't even have the foundation that I do around financing. And so it's even more difficult for them. So I really try to, share my story and be relatable so that they know that it is attainable. So I try to be the hope that they can't see just by sharing my story.
Yes, and I appreciate that. And I appreciate you sharing that with us, because I do know that a lot of the audience, dare I say a large majority of the audience, can relate to at least some part of your story, even if it's from your childhood with the daddy-daughter relationship, right? I know I can name several people right now, who had their dads wrapped around their little pinky, and can relate to that part of the story. Also being able to relate to that part of the story, going into the bank and cashing that paycheck. And we had that. Yeah, this is a Christian broadcast, but we were in that just got paid Friday night. You know what I'm talking about?
Yes.
You haven't always been saved, right?
Right.
So So in looking at that, we appreciate you sharing your story, but you do also, you serve today in a different capacity. And I wanted to make sure that I go back here and talk with you because you are a mortgage banker, and this is a very important step. Purchasing a home is probably one of the largest assets that a family can or will own in many cases. So there's some key benefits, dare I say, to having a mortgage banker. So what would you say are the top three from your perspective as a mortgage banker? What are the top three benefits there?
I would say the top three, number one being that accountability
Mm,
partner, almost like a coach, someone that has the professional experience and the knowledge base to make sure that you're on the right track in the process and connecting you to key people that are going to help you along the process. But knowing that and having that relationship with the right mortgage banker,
yeah.
because that is critical. This is a relationship. It could last 1 month, it could last 6 months. It may even last 12 months. Not as
Mhm.
intimate over a 12-month period, but if you have someone with some pretty serious credit issues or they're just planners. I have a client now who she works in the tax industry, excuse me, and she wants to relocate back to Tampa. That's her hometown. She's older. She's the only one here. She needs to be near family. Well, we've started a conversation, but her actual move or financing may not happen until 6 months from now.
Right.
So, as a mortgage banker, it's my responsibility to stay in communication with her, to make sure she's doing the right things now to prepare for that.
Mhm.
I've contacted insurance persons in the area. I've contacted a realtor in the area. And of course, she needs to go through the financing first, but I want to make sure that I have the key people in place because for me, this is all about relationship. The
Absolutely.
mortgage industry is all about relationship. The company I work for, that's their platform. That's why I aligned myself with them. It's more than a transaction for me.
Mm,
And so I am strategic in aligning myself with partners who are like minded and feel the same way because I truly safeguard the relationship that I have with my client because they're trusting us. Again, this is a very large purchase that they're making. So, as far as back to your question, the top three things, I would say finding the right mortgage banker. So someone that you like and someone that you can trust. Those
mm.
are critical. And someone, of course, who's knowledgeable. We don't have all the answers, but they should always be able to provide you with an answer. Whether it's now or tomorrow, you should be able to get the answer to your question.
Yes, yes. Oh, that is so important. And I love you started out with accountability because that's of utmost importance as you're moving through this process, not just in the purchasing of a home, but in your finances in general.
Yeah.
Oftentimes, we need that accountability partner to help guide us through this process. But one of the things that I wanted to ask you as well, and it's one of the things I know we didn't do this when we purchased our first home. We did not talk to the mortgage banker prior to, we did not go through and get pre-approved for our first home prior to going out and looking.
Mm,
And when we came back to the table to have the conversation, there was a little bit of disappointment.
exactly.
On our end. So why is it do people fail to get a mortgage banker? And what are some of those outcomes of not being properly prepared?
Yes. So I think again, it goes back to, my experience as a young person with money and most people's experience with
Mhm.
money. They see it as a way to get things that they want. They don't see it as a resource, as a leverage, as an opportunity to, leave a legacy or build wealth. It's just a consumer-minded approach. And so with that mentality, you're always shopping for the thing first.
Mm.
When you have a consumer mind versus a wealthy mind, you're always going to pursue the thing before you think about a plan of how this is going to play out in my future planning of building wealth and leaving a legacy.
Yeah.
So it's almost impulsive. We are shoppers. And so the first thing we want to do is to go shop.
Yeah.
And so we have to recondition our minds to understand that not only is this the biggest purchase that you'll make, this is actually the best investment that you can make, in my opinion, as a consumer. I do feel like real estate is the best investment that you can make. And so if we approach this from the mindset of buying right, then we know it's not about the actual home. And I know for some, they're like, well, what do you mean? I want my master bedroom and you can have all of that, but approach it from a standpoint of an investment, so how can I leverage this? So location, when you're looking for a home, you want to consider location. You want to consider cost. So this comes back to seeing a mortgage banker first, because the mortgage banker is going to let you know this is your affordability. And you have to know what you can afford before you go and shop. And what people should realize is that you can still get that dream home in your price point. I mean, I pride myself, I started off as a shopper. I worked in retail, and having had that exposure, I understand I will never pay full price for anything. Anything, Lynn, never.
Yeah.
A house, a car, or what, I will never pay full price. We have got to get away from, the shiny, the bright, everything's in place. I want the mannequin. We can create the mannequin with what is affordable for us. So we go to the banker first, find out how much we can afford. And if you're not a visionary as I am, you make a visionary as a part of your home buying team so that they can help you see, help you get to where you want to be. You want this master bedroom on the main, you want all of this. And in your vision, you can only see that in this $300,000 house and this new subdivision next door. But once you've gotten your approval amount from the banker and you don't have that ability to cast vision like that, then you bring someone on your team and they can show you how you can have that same house at $180,000. So yeah, I definitely feel like, prioritizing, we do things in good and decent order. And the good and decent order for home purchasing is to see your banker first, to know what can I afford before I start shopping.
Absolutely. Guys, you are listening to WYTV7 Christian Broadcasters Network. This is Financial Confidence, and I'm your host, Lynn, Demmons. So guys, I definitely want to implore you, if you don't have your pen and your paper, go and get it, because we're dropping some nuggets here that are going to help you build generational wealth and leave an inheritance for your children's children. Yes, that's what we're talking about today, guys. We're talking about the home buying process, because home is where the heart is. All right, Miss Jonesy, back to you, Miss Lady. Thank you for sharing this powerful information. So, what are the steps of being financially informed that our listeners can do today?
First step is, if you have not pulled your credit report, pull your credit report. You can pull your credit report in the state of Georgia at no cost twice a year at www.annualcreditreport.com. So this is a website that you can go to. It allows you to access all three bureaus. It does not provide you with a credit score. And so often we get so focused on, well, it doesn't give me my score. I don't have my score. But what it does provide you with is information about what has taken place with your credit, the behaviors. So it's going to show if there's any collections, if there's any late payments, if there's something on there that you have no idea where it came from. So this is an opportunity for you to start addressing items on your credit report that may be having a negative impact on the score that you don't see at this time. So we can get into the work before we even see the score, you know. But I know for some, we're motivated by numbers, and we need to see that number. We need to see what benefit is happening as I do these things to clean up my credit. And so there are several resources out there for you to do that as well. You can go directly to the credit bureau, each individually. A lot of the banks now have it as a part of your banking services. So when you log on to your account, you can click and actually get a copy of your score. And there are several different scoring models, and I won't get too much into that. But for the mortgage industry, we use what you call Vantage Score, and it takes all three scores. We look at the middle of the three scores to determine how much you can qualify for. That, along with other factors. So that's one thing you can do, is to first and foremost pull your credit and look at the credit score. The next thing you can do is to start using a budget. If you are not budgeting what's coming into your house right now, you definitely want to start that. So where do you begin? I'm traditional. I like pen and paper. I like whiteboards. It's something about connecting to that left brain. And that's, if you can use whiteboards, regular paper, and start documenting your income. And you do this on a monthly basis. So you document your income and you document your expenses. What is leaving out of my home? And expenses break down in categories of flexible expenses, which would be groceries, entertainment. And we say flexible because you're able to change that number. So if your budget is short, those are areas where you can cut back from. There are digital budget apps. Yeah. So there are also digital budget apps, mint.com. There is the wallet. There's several out there. If you are more into, yes, every dollar. Yeah, if you Google digital budget apps, free apps, you'll find a variety. So you find out what works for you. But you want to create a budget. So you want to pull your credit, create a budget. And then if you have not been saving, you want to start saving. And so people are saying, oh, well, I have more month at the end of the month than I have money. So how do I do that? So in my previous profession, I would tell my clients all the time, you do that by starting the habit. How do I start the habit? So if it's $5 of pay period. So now what you're doing is you're triggering the mind to
Yes.
get in the habit of saving. And once you start saving, there's somewhere you can eliminate eating out, a movie, somewhere where you can take money and now use that money for saving. So whether it's 5, 10, 15, $20, start the habit. And then you'll see as you are more intentional with your finances because you're using a budget now, more money will become available. And as the more money becomes available, that's more money that you can allocate towards your savings. So
Yeah.
pull your credit, budget, and saving.
All right, guys, those
Yeah.
are excellent tips. Excellent tips. I also wanted to reiterate, guys, definitely get on that credit report if you have not. We've talked about that several times here at the show. So we have another confirmation from a different financial expert saying, guys, pull that credit report. So if you
Yes.
haven't done it, make sure you hear us today and take action. The second thing, guys, make sure you get that budget. If you don't have a free budget and you want to electronic download, go to DemmonsEnterprise.com. We have one there for you as well. And start that savings plan, guys. That's very important. Start saving. You must start somewhere. Find that $5, that $10, that $15. It doesn't matter. The matter is that you start, right? That's what's most important. All right, Ms. Johnsey, one last question before we get out of here. How can our listeners find you if they want to get in contact with you and follow up? I'm sure that they have some additional questions about this home buying process. But before you share with them, I also want you to share about your workshops. Home is where the heart is. So I had an opportunity to participate in one of her workshops, guys, and they're extremely valuable, especially if you're here in the Georgia area. So you care to share a little bit more information about those opportunities to connect with you live?
Yes, I would love to do that. Home is where the heart is. We just kicked that off in January. As Lynn said, she was able to participate. We had our first workshop February the 9th. We will be having those recurring every month. So you can definitely go to my website. You can go to my Instagram at John C. Lee is my Instagram. We will have all the information posted there. My phone number is 770-595-5772. Again, that's 770-595-5772. And the website is atlanticbay.com/John C. Lee. And we will be doing a series of workshops every month. We're getting creative with these. The next workshop will be more conversational. We'll have wine, and we'll be just talking about the mortgage process and how to get you into your home and how to buy right. You know, you never know. You may want to buy a second home, you may want to invest, but this is a great opportunity for you to leave a legacy for your family. And at every one of our workshops, we will be giving you information to help you do that. So please reach out. I'm available for any questions that you have, and you will be able to see all of our upcoming events if you visit my Instagram. I'm on Facebook as well. John C. Branch Lee is my Facebook for Home is Where the Heart Is. It was
Yes.
great sharing with you, Lynn, and sharing with your audience. Thank you so much for having me.
Well, Miss Johnsey Lee, thank you for being here. Thank you for your expertise and sharing with us. And we hope to invite you back again to the show. I hope you will be feeling, hey, I think I want to come back to Financial Confidence and share because there are some great opportunities out there. Well, guys, thank you for tuning in to WYTV7 Christian Broadcasters Network. This is Financial Confidence. We want to thank you again for tuning in. And if this has been valuable to you, make sure you share this out because sharing is caring, right? Yes, we all
Yes.
know it. Sharing is definitely caring. Get it out in the community. And if this has been either entertainment or educational to you, go on over to WYTV7.org and leave a donation, because we're doing what we're called to do, guys. That's build generational wealth and leave an inheritance for our children's children. Thank you again for tuning in here at Financial Confidence.
Thank you.